Hey guys, welcome back to the Capital Mindset Show. As you can see right in front of you, we're going to talk about Alibaba. Alibaba reported earnings today, and the stock is up tremendously throughout the day. Now, I talked about it a little bit in my YouTube short. You might have seen me on my run. I like to do those here and there when I can. Some people like the short-term views, or not the short-term views, the short-term news. And so you remember that YouTube keeps me to 60 seconds, so I apologize for that. I do post longer versions of those videos when possible on Instagram and TikTok. So you might have noticed that it cuts off randomly. That's because YouTube doesn't allow me, unless I turn it into an actual video. But the point is to make it into a short. All right, so I'm skipping over all the way into the Q&A section because I can kind of go over this company's business. We can go through the PowerPoint. We'll kind of do that as well. I'll be going through it as the Q&A is kind of going through, taking my notes. Towards the end, we'll do our classical evaluation of the company. I'm not going to talk too much about, the VIE and all that stuff because there's plenty of content on there. Again, I want to just show you guys, this will be in the description below if you haven't seen the new video. This is the content library. So this is of every stock I've ever spoken about. You can see that Alibaba has a ton of videos on it. And I promised you guys, every time I'd mention this, I said there's plenty of content on the VIE structures right there. So it's all there. And you can see going back to, August 23rd, 2021. So all the way back then, that's when we were talking about the VIE publicly on YouTube. Of course, I have a little bit of, we won't talk about that. There's no point. And as well as, and I can already tell I'm missing one video, so I should probably add that video because there's a lot of videos on Alibaba. Now, this will be yet another one, but this will be focused on the earnings. So with that being said, let us begin with the Q&A section.
As a reminder, to ask a question, please press star, then 1. Our first question comes from the line of Ronald Kung with Goldman Sachs.
谢谢 Daniel、Joe、Toby 和 Rob。那也恭喜这个业绩也非常的 resilient。能看到呢，这个 CMR 的 revenue 是基本上是 flat 的。那所以这个 GMV 虽然有一个 low single digit 的一个下降，但 CMR 是 flat。刚才 Daniel 你提到这个广告是有一个比较好的一个表现。那想知道我们进入4月有一些 COVID 的一些疫情，导致刚才说有 low teens 的一个下降，因为这个应该是 GMV。那我们应该怎么去想这个
You guys notice, by the way, that it's kind of English mixed with Chinese. It's because a lot of the financial terminology is Western, so in nature. So it's actually the in Chinese there isn't a universal equivalent. It's easier for them to sometimes do that. That's what I was explained to by another Chinese person who was able to kind of explain it to me, because I was like, why are you saying that? So you probably heard him say there, because most of his question is in Mandarin, and then the rest of it is, or the very few pieces are in English.
CMR 的 revenue， 然后这个 gap， 还有在5月我们看到整个包裹network 开始有所 normalize， 那我们有没有看到从 GMV 或者CMR 的角度有没有看到一些环比的一些 recovery？ 谢谢。
Thank you, Daniel, Toby, and Rob, and congratulations on the resilience that we see in the results that you've just released. We did see that CMR revenues were flat, but there was nonetheless low single-digit growth in GMV, and Daniel also spoke about how advertising was performing well. Certainly from April onwards, with the impact of COVID, there's been an impact there, including on CMR revenue. But I'm wondering what we're seeing in May in terms of the performance of the parcel network, and if things are picking up, and what we're seeing currently in terms of GMV and orders in May. Thank you.
好，谢谢你的问题啊。然后其实是这样的一个情况。
I'm going to skip over to the English version.
Do you see any long-term structural change in your operation, customer demand and product mix after these lockdowns? And what type of investment you need to make to handle the potential changes? Thank you.
好，管理层晚上好啊，感谢接受我的提问。你们也提到了，就是涉及到疫情的影响，你们在做出了一些长期的一些改变。那么，假如说能够全面解封的话， 你们在长期的这个战略当中，认为需要做出什么样的一些改变吗？包括在运营层面，或者是涉及到客户需求方面，或是产品结构方面，你们认为需要做出什么样的长期的改变？然后为此需要做出什么样的投资？
Thank you for the question. I think during this, widespread COVID, in March and April, we do see a shift of the consumption pattern, and I think after this, this wave, I think what we see that actually consumers in China, they will tend to have some stocks at their home to prepare for the uncertain situation. So how to grow, for example, the supply by bulk, and how to give them a on demand but not necessarily speedy delivery, but it's a on demand and on time delivery. I think it's very important. And for us, I think we believe we are in a good position, which that we have both our nationwide platform, as well as the leverage by the delivery networks with major delivery partners. But at the same time, we have our intercity and instant delivery forces on the ground in all of these major cities. So how to leverage these infrastructure and enhance these capabilities and capacities is our priority in the future for to support the various needs of the products. So product-wise, I think it's more diversified to the bulk sales for preparation for the future, and for the small package just for the instant delivery and for the instant needs. So it's about you need a diversified retail formats as well as the delivery and the fulfillment network to support both of this. Thank you.
Thank you.
Thank you. And our next question comes from the line of Thomas Chong with Jefferies.
Operator, hold on a sec. The translator still needs to translate.
对，在3月和4月份，这一波疫情当中，我们确实看到一些消费趋势的变化。那么我想经过这一轮的疫情之后呢，这个消费者他以后。Thank you, and good evening, management. My question has to do with consumer spending. I'm wondering what changes you've seen in consumer spending within different segments of consumers, high income, middle income, and low income consumers. Are low income consumers perhaps tending to be more cautious during this recent period? Also, I'd like to know what KPIs you set for this year's 618, and how you see recovery in the second half of the year. Do you think that once logistics capabilities have recovered, that will set the stage for recovery, or will we have to wait a bit longer perhaps to see consumer sentiment also recover? Thank you.
好，谢谢。我来回答一下。第一个呢，从人群分层我们看，因为整个我们阿里巴巴这个零售平台上，有这个我们的这个10亿的消费者，其实覆盖了多元化的这样的一个分层啊。其实我们可以看到不同的消费者的一个表现。这个整体上，我想在这个特殊的阶段，我们看到的情况，实际上最重要的还是必需品的生活消费，还是非必需品的生活消费，其实发生了比较明显的变化。其实从消费者来讲，无论是哪个分层，他对必需的生活消费品他的需求的更强烈，并且其实在特定的情况下价格更不敏感因为他为了这个基本生活需要。而相反对非必需品的消费会表现的相对价格更敏感一些。
Thank you. Well, on Alibaba's retail platforms, we have a consumer base of 1 billion consumers who are highly diverse, spanning all those different tiers of spending. And so, yes, we certainly do see different patterns there. But what I can tell you is during this special period of time, you really see a divergence between spending on essentials versus non-essentials. In all those different tiers of consumers, demand for essentials has gone up, and there's been less price sensitivity, whereas with respect to non-essential purchases, there has been more price sensitivity.
这个其实也跟你问的这个下半年的趋势很有关系啊。我的观点是这样，我觉得整个的这个消费的恢复啊和增长，其实是要靠两方面的力量。一方面当然是就像我这个 script 里边讲的，商家需要这个持续的这个经营的前提条件，就是这个可持续经营稳定的物流和供应链啊，商品供应链和物流啊。但是另外一方面还是需要消费需求的恢复。你先翻译吧，我再讲下半段。
And this is also very relevant to the other part of your question about the trend for the coming half of the year. Because in my view, for recovery and growth of consumption to occur, two things need to happen. First, as I mentioned in my script, merchants, in order to be able to operate, need to have sustainable and robust supply chain and logistics in place. And at the same time, consumption demand needs to return.
对，那消费需求恢复的非常重要的，其实还是这个用户对未来的预期啊，对未来收入的预期，对未来生活的预期，会决定他们的这个消费的开支。啊，当然还有重要的一点是它的可支配收入的这个稳定的增加啊，我想这些方面都会决定了这个消费的力量能不能这个更好的增长，同时特别是在这个除了基本生活必需品啊这些食品啊这些家庭日用品以外，在非生活必需品上啊能够恢复到原来的消费的态势啊，我想这个是消费能够不仅恢复并且带来增长啊。这个对中国 GDP 的发展做出贡献的非常重要的一个前提条件。
And in order for consumer demand to recover, it's very important that there be strong expectations for the future. Because only when people have strong expectations of the future, and in particular in their ongoing ability to grow their disposable income, will they be able to grow their consumption. So going beyond essentials, but getting back also to increase spending on the non-essentials.
Okay, so basically I went through the rest of the call. I didn't have to put you guys through that, but it's going to be a little bit shorter, I guess, earnings call thing. But you guys can go check out the full call. And yeah, it's a bit long because of the back and forth translations. Basically, what I can summarize from the call is Alibaba's doing good within China. And aside from the factors regarding COVID and the other various headwinds, you could say, the company is executing well. Now, I'll highlight some things that I found not to be okay. Well, we look at Alibaba Cloud, and I just brought us back to this. It increased by about 12%, which is rather slow growth when compared to the giants of the United States. Goes to show you the difference in terms of quality between those businesses. Now, Alibaba has vast arrays of businesses within China that they dominate, and they do have a home ground advantage. For example, other companies that would wish to do business in China can't really do business in China. However, there are some implications as to why, if I was an investor, I wouldn't want those companies to be doing business in China either, for various other reasons. There are a lot of capital control restrictions that people don't really actually pencil out as a risk profile. So not to get into it too much, but basically companies, and in my opinion, it is of my opinion, Gap needs to adapt to the Chinese system. Like I said, you have to, some people might say, well, you need to understand that they're different. And it's like, okay, I do understand they're different. I've heard that argument before. I say that Gap should reflect cash held in China as differently from cash held in pretty much any other country in the world due to the capital restrictions. That cash is supposed to, under GAAP measure, under the philosophy of GAAP, you could say, be the most liquid asset, money that you could move at a moment's notice. Well, cash in China isn't really the same thing due to the capital restrictions. I would actually classify it not as necessarily a class 1 asset because it's not as mobile as, let's say, a traditional class 1 asset in another one where you know the value of it. You know it can be moved and used as intended to. Chinese one, no. So, but, aside from that, they are performing really well. Growth was decent. Growth was about 8% versus, I think, Amazon's 7%. So much, you could say better, but I'd still would prefer Amazon 7. I think the quality of that 7 is greater than the quality of that 8%. I think that the specific growth measures, if we take a look at something like Amazon, Amazon's cloud is growing much faster, and that is a higher quality form of revenue growth than something like the traditional retail form. Okay, so while cloud is growing at 12% clip in Alibaba, at Amazon it's growing a little bit faster. Okay, and with that being said, I'll actually quote it here. So about 40-ish%, just under 40% for Amazon. So very lackluster in regards to that, just on a business perspective. Now, we do have a lot of headwinds regarding the Chinese economy. It almost seems like they're committing, self-inflicted damage regarding the lockdowns, which is not ideal for something like Alibaba. Now, they did talk about some robustness, and they grew relative to the rest of the competitor base because of the lockdown. They actually cite the lockdown as a reason because people were at home, so they need to order food and goods and stuff. But longer term, that presents a little bit of a problem for me. Again, we're talking about from the business. We're ignoring all of my opinions on the VIEs and all that stuff. So sticking strictly to the business. I would also say that, the cloud business not growing. I mean, I'm really bummed out by that if you can't tell. So, and I'm again, mentally, I'm ignoring all the other problems I have with it. I'm just looking at the business. So local consumer services did grow nicely. We actually see a 29% growth here, year over year. And I'm going to ignore their adjusted EBITDA. All right, I'm not going to care about it. I'm just looking at the revenue in this case. But yeah, we are seeing some improvements there in terms of growth. Now, adjusted EBIT margin, I don't know if this is, negative 52%. So this is a loss-leading business at the present moment, but that's fine. They can have loss-leading businesses if it can generate or show up somewhere else. Now, with customer engagement or direct sales and other Chinese wholesale, okay, this is what I was looking for. Chinese wholesale, this was what was growing 30%, but it's off of a small number. Direct sales and other only grew 14%, and customer management grew 0%, so it didn't grow at all, which is rather disappointing on that front. But the smallest business, of course, can grow the fastest. So it's not really that much of a shocker, so to speak. All right, and I want to see if they show me, or I'll go to the other sheet if they don't show it to me here. Yeah, we can see this. Okay, so non-GAAP net income. So net income right here for 2022 in United States dollars was actually negative 2.8 billion. This is for the 3 months ending, and for the year ending today, it is positive 7.4 billion. So in terms of last year, we do see a drastic decline. So we're going to find out exactly where that's coming from, but it's actually, right there. It's from the operations. So we do see already a recorded loss from operations, which they'll probably explain up here. Hopefully, if not, I'll go find it in the actual statements here. So let's just look for it in the statements. It's better. All right, so net income loss right there. Loss in income from operations. So loss income from operations, we do see again, yes, the 10 billion here. Share-based compensation expense, adjusted EBITDA, so they're adding that back. So the EBITDA is about 20.5, so that's their operating income, you could say. And then adjusted EBITDA there, depreciation, amortization. So they're trying to show us the rosy picture here, so positive 24 billion. Share-based compensation was about 3.7. In US dollars for the 3 months, they actually had a negative number, which it tells me that they were repurchasing some shares there in that case. So it's that repurchasement, actually, they removed it. And here, they're adding it back, so they're actually increasing the totals. And so it goes from, again, 10 to 20 after you add back all those expenses. But I consider share-based compensation a real expense. Of course, to be honest, if I was them, I'd be issuing absolute asinine amounts of shares because I'm not actually. I'm going to stop myself there. Go watch the other videos. Okay, so as far as the quarter goes, I'd say that overall it was a decent quarter. Basically, the market is reacting as I think it makes sense. Free cash flow is where all kind of ended off. They actually ended with $15.597 billion in free cash flow. Again, you do have to consider stock-based compensation as a real expense, but after everything, you can kind of see that, they actually purchased, so there they have the CapEx. The CapEx measure was about 6.6. Now, I want to see, okay, unfortunately, they don't have they have the last year renminbi. So I assume on a constant currency basis, let's assume that, which I'm making an assumption there, it has actually, so they actually have risen, the CapEx, which is fine. That's all well and good. But as far as free cash flow goes, it looks pretty good. So $15 billion. I'll show you guys the stock price in a second. So Baba stock is trading up nicely today. We do, and I'll adjust this in a second. There we go. So we do have a movement of 14.79% up today. Market cap is $255 billion. And on a PE ratio, on a GAAP PE measure, it's 26.50. So looks, not cheap, not expensive. Well, sorry, expensive, not cheap. And I'd be kind of questioning that a little bit. Well, not questioning it really, because if we take a look at the cash flow, the free cash flow of about $15 billion, that's about a 5% yield, which is, again, like a price to free cash flow of 20 at the present moment. Just slightly under 20, so because it's technically 5.8% in cash flow yield. Where that kind of plays into the evaluation, we'll actually take a look at that now. So if I bring up the model here, and I already kind of plugged in Alibaba, let me just make sure it looks good for everyone here. So let me drag it here, and don't worry, I shall zoom in. Fear not, mobile users, I will zoom in for you. So if we plug in Alibaba, any form of growth that achieves 15-ish%, you can see why Everything Money was buying it, because that was kind of like their assumptions and stuff. But I would say that for something like this, you would for sure want, even like with a very high margin of safety, it says it's buy. So my brain kind of tells me right there that I'd be kind of cautious, like, why is the market pricing in? If I didn't know anything else about this, just kind of like a hint, right? I'd be like, why is the market just seemingly ignoring this company? What is the risk that I'm not seeing, right? And there's a bunch of risks actually embedded in this company. One of them being that it's in China. That's one risk. But there's a bigger risk that I've talked about in the past, but again, a lot of people disagree with me on that risk. I own the shares because of, as stated in the video, I talk about it in video Alibaba December 6, 2021, towards the end of that video, and I do talk about it in every subsequent video after that, why it is that it's in the portfolio. So, I am on record saying why. Now, as far as the buybacks go, I do think that they're going to continue to moderately dilute here and there, that they are going to, do token buybacks here and there, coddle the investor in the West, and, perform as they should. They perform amicably. Now, I will state for all intents and purposes, the cash flow for the foreseeable future, and I checked with analysts, they do expect cash flows to actually grow at about 15 to 25%, continuing from here on to the end of time. I will state that right now at the present moment, the model is actually not pulling in the current amounts. So what I have done, or what I have basically insinuated, is we're going to do 20% on the high end, and then we're going to lower this down to the 10%, because when I actually penciled that out, that actually came out to around a recovery point of the same amount. So we'll continue like this, 17, 15. Oh, didn't mean to do that. And last one, 12. So even on the lower end of the spectrum here, we do see that the company was a quote-unquote buy at those lower prices. But But I'll say this, maybe a 20% discount is not necessarily optimally reflecting the risk associated here. Again, ignoring what my opinions are about this company, the company does appear to be executing well. Revenue seems to be growing tremendously. You can see that the full year 2022 estimates of cash flow are actually supposed to come down. They are reporting that the 2021 cash flows are somewhat showing some weakness, so the estimates are actually down, but then from here they expect it to grow. This is actually technically incorrect. They IPO'd around here, so this is actually pulling something, or it's behaving weird. I don't know what it's pulling. Now, analysts overall, I did see they do have a buy rating on this company, so depending on where you go, they'll have different levels of buy ratings. I'll say that, for example, here it's pulling a strong buy. The sentiment is above 1, so it is positive. This is a retail sentiment favorite. If you remember in the portfolio, I have over here, and I'll show this. By the way, the position's over here. And again, there's plenty of videos on as to why it's even in there. Well, we go to the YouTube index, and you might ask, why is it in there? Well, it's because it's talked about a lot. I haven't even seen the YouTube portfolio. Oh, look at that. Didn't even see this. Very Good Food Company is up 39%. I'm a genius. I predicted it. Just kidding. But yes, aside from that, SiriusXM, I did not even notice. I forgot that SiriusXM was even in here, but it's up 1.61%. Okay, cool. And now SoFi's back to break even. Oh, yes. All right. But anyways, Alibaba's in here because it's heavily talked about on the YouTube community. Again, I want to cite the warning. This is for fun. This is warning, do not copy. I don't know how many people think that this is like what I'm invested in. That would be really funny if people actually think that. But anyways, that's pretty much what I wanted to show you there. Now, if we take a look at the ratios here, the ratios do show a company, again, that is improving or remaining stable in most categories. As far as the solvency ratios, a lot of them are actually improving. Liquidity ratios are also, staying the same, actually, somewhat deteriorating in the cash ratio, but nothing too drastic. Now, on the DuPont analysis, we do see some deterioration in the gross profit margins, operating margins, and net profit margins. So they are becoming less efficient in those categories. ROA, ROE, pretty good on the ROA, like remaining stable, ROE remaining stable. ROIC has been pretty good, consistently good, and earnings quality has been consistently good. So all in all, this company has shown itself to be of a high caliber, of a high quality. It's just, there's some added nuances that I think are very important. I think that, for example, from a philosophical standpoint, I think I wouldn't necessarily desire to hold a company like this as a core holding, but I completely understand the premise or the points being made by investors who say, well, this is a fantastic company, and look at the cash flows, look at the performance, and all that. Yeah, I get it, and I think that, in my opinion, it may be. We'll see. I think that from where I purchased it, which I'll finish off with that, I made a purchase. You can see my holdings on the speculative side, and I'll zoom in again because I know my viewers. So I purchased it, and I am currently down on Alibaba by 13.79%. The average cost, I knew it. So this formatting is incorrect. That should be in dollars. There we go. Those percentages were crazy. So on average, the average cost is about 109.59. And again, there's the video talking about it. It's in the December 6th one. So I told you which one it is. And it's towards the end of the video. And I also had bought Tencent. I sold Tencent. And I did it in a live stream. I actually have to find it because there is a past investment tab where I actually also link the videos in which I talk about it. And I'm currently actually trying to find the links to those videos. But anyways, Tencent, I did also sell this one. And I bought Prosus instead to kind of, again, hold that YouTube accountability consistency. This is also incorrect. So I'm going to actually remove this, because they're not all in there. Oh, okay. It's not going to let me. I have to go in the back end and manually do it because it's out of order now because I changed the order. So that's out of order. But anyways, I have to go back in the back end and actually change that. Anyways, regarding Alibaba and Tencent, I think they're both kind of together in the same boat, sentiment driven. And I think I was kind of proven right when the Chinese government came out and made one common statement about how they're going to help out the business class, etc., that these stocks shot up a tremendous amount. Here today, they reported better than expected earnings. The stock shoots up a tremendous amount. I think it's sentiment driven. I think that the company I still can make money on this based off of greater fool theory, but that's the application that I'm attributing to it. It's not that other people are investing based off of that. Other people are investing it quite literally for the business. And again, I get it. Okay. So all in all, good company, great execution. I think people on YouTube will still continue to talk about it. I understand that the numbers make it look very good, very compelling. And yeah, I think that, again, it is a market and we can all have disagreements on it. I have subscribers that have been with me for some time. I know you guys by name, and you guys are bullish on Alibaba, and you guys completely get my opinion, or you know my opinion, and you're still okay with it. And then that's what makes a market. That's the beautiful part about it. So again, don't come to this channel thinking, we're going to have a fight or something. No, there's no fight. It's just sharing of ideas. And then you guys can comment your ideas. You guys can come on the Discord, comment your ideas. And that's how we can all become better investors. I don't have all of the answers. I don't claim to have all the answers. But on that note, thank you for listening to my opinion here and on our take on Alibaba's earnings. Wait up for the next earnings on Costco, which this one I'm really looking forward to. I love the store Costco, and I'll see you guys in the next one. Bye.